Good morning, everyone. Hope you're doing well. Yep, it is. It's going to be a quiet day. It's going to be really quiet on Monday as well. I imagine there's going to be pretty relatively low volumes up until Tuesday now. So, we're still going to get a little bit of movement. Of course, the markets are essentially never, they're never going to shut down completely, but it is going to be relatively quiet. In terms of fundamentals, before I get onto the plan that I've got for us guys this morning, 1:30 GMT this afternoon, we've got building permits for the US. So that one's coming out. Don't expect that one to be too crazy, especially not on a day like today. And then that is it. We've got the Treasury Department report as well out later on this evening, but I don't think it's going to be too crazy. I don't think there's going to be too much of anything going on there. So in terms of even having fundamental drivers today, there isn't much. Excuse me. So yeah, just it's going to be pretty quiet, guys. So today, I think you should really put some work into your analysis. Look for potential setups coming through into next week. Make a little bit of a watch list for yourselves. Things that you find interesting. That's pretty much what I would. That's what I would be doing myself. Now, so what we're going to do this morning, guys, is I am going to build you guys a checklist of what to do and what to look out for when you're executing a position using my strategy. So that is my plan this morning. What I want to do is I'm going to write it down myself as well, guys, because bear in mind, I haven't needed a checklist. To follow for years. Okay, so this kind of stuff is all. I keep on forgetting the fact that I'm talking to guys that haven't yet been using the strategy. Some of you haven't even been in the markets for 6 months yet. So I've got to keep on reminding myself of that fact. So I'm going to write the checklist down myself just to make sure I'm not missing anything out. But remember, guys, it's a two-way street. So yes, I'm the one that's going to be giving you the guidelines here. But if you think there's something that would be very helpful for yourself, feel free to shout it out. Feel free to shout it out in the room, because I guarantee, if you find it helpful to yourself, somebody else is going to find it helpful as well. So make sure you get involved. But yeah, I mean, the importance of a checklist. I mean, I went through and did a bit of work with the psychology side of things with you guys, or what I could do from my own personal experiences. And the checklist, I mean, it's a bit of a given for any pretty successful trader to have some kind of checklist to follow. But when you're beginning and when you're just starting out in the markets, and especially with a new strategy, it is of the paramount importance. And you can see an actual improvement in your performance from it if you just tick off every single thing on that checklist prior to executing a trade, because you've got the confidence in yourself that you followed the checklist. You're not skipping any, cutting any corners, so to speak, in rushing a trade and running the risk of a trade going into your stop loss. So I thought it'd be a good one for us guys to focus on this morning, as opposed to doing a market scan, which I'm basically going to turn around and say things are flat and we're not seeing much anywhere. And actually make best use of our time this morning. Again, guys, as well, I am off at about 12:30, so I've got a big old family do. So this will be the only time I'm on today. Yeah, exactly that, John. And just like a user manual to the Precision Sniper system. So we're going to be doing it on the daily, just because the daily's easy, relatively easy. Price action is relatively the same all out, so this checklist won't change between time frames. But what I'm saying is the daily is just very, very clear to determine what exactly we're talking about here. So Aussie NZD we'll use just because it's a big ranging pair, like most of them have been recently, but this one's been in a huge range. So number one on the checklist, what's the first thing I do when I get to the charts? So the first thing I do is, if I open up a random pair, so I've opened up the Aussie NZD for this example, I'm going to be looking for where price action is in the market. I'm going to be, I'm going to be reviewing the bigger picture. So go to your daily time frame. So the first thing is, where is price action currently? And then in brackets, you can put path of least resistance, because we're always looking for the path of least resistance. Are we approaching a major area of support? Are we approaching a major area of resistance? Are we going to be taking a long up here at the highs? Okay, no, we don't want to do that because we're just up and around and losing steam amongst a major resistance zone here. Okay, this doesn't support and resistance. I'm using zones. I'm using supply and demand zones for this example. Again, guys, I also like using support and resistance levels. But the zones, again, it's very nice and easy to interpret from your guys' perspective, your guys' point of view. It's very easy to determine where the tops in the markets are around this area, okay? Got a lot of tops in the markets around this area. Yes, we have a couple of breakouts here, but generally speaking, we have a lot of tops and reversals coming into play in this stage. So that's the first thing that I want to be looking at, okay? So taking an analyst's perspective, where is price action currently trading? And where is the path of least resistance? So the first thing, let's look at this one in the middle. Okay, so let's start off our chart from here. So we've been trading up here. We've had a nice run to the upside. We are now trading within this resistance zone. Okay. So the next thing I want to see is, I mean, the moving averages we already know are below price, but have we got nice breathing room between where price currently is trading and the moving averages? Okay, so is there nice, I don't know how to word that. I mean, how would I word that? Is there a significant gap between price and the moving averages? Is there enough room? Okay, no. Yeah, you could. Yeah, exactly. Spread, void. I mean, it doesn't. Yeah, the word. I tell you what, guys. You write down the word that you're going to understand best. But for me, for the sake of it being really simple, is there a nice spread between price and moving averages? Okay, cool. Yeah, you can use fib. I'm not using fib for this example. I use fib extension quite frequently, but only in the trending market, generally speaking. And fib retracements for pullbacks and stuff like that, relatively speaking. But I've got to be honest, guys. I actually use price action itself a lot more than I use fib. I really do. I mean, I used to use fib a lot back in the day, but I've really moved away from that, and I just look at areas of price action. You know, the targets that I give you guys on a daily basis, and I say I anticipate price action reaching here. And obviously I make mistakes all the time, but in a roundabout way, it's pretty accurate. The targets, generally speaking, those targets come out pretty accurate, and that's without using a fib. And then I get someone in the room being like, "Oh yeah, that was actually a 36.8 fib level or a 50% fib level," and I didn't actually use the fib. I'm just using price action itself to determine the outcome there. But if the fib levels work really well, I would promote them. They're very, very good. And for some reason, price action is always attracted to those levels. So it's a good tool to use, definitely. Exactly that, Logsy. Yes, spot on, mate. Yeah. Is there enough meat on the bone to consider taking the trade? Okay, and what I mean by this, I'll give you guys a live example here, okay? So, do I want to be taking a short right here in this area? Let me just draw a little circle around it, yeah? That area right there in the center of the chart. Do I want to be taking a short right there? Probably not. I don't want to be looking at short in the market directly above a daily 200 EMA. Now, I know in this example, price action just goes through anyway, but I don't really want to be trading until it closes beneath that 200 EMA. And then immediately below, we've got the 50 EMA anyway. But what I would be doing now is this reverts back to number one. Where is price action currently trading? What is the path of least resistance? And what's price action's previous relationship to the moving averages be, yeah? So option number one is going to be the analyst perspective. Now that covers a broad range of things. Where is price action been currently, what does price action currently look like? Well, up here, we've actually come through this 50 EMA pretty easily the time before that. The time before that, we smashed through it pretty easily as well on this daily time frame. We haven't really seen too much of daily pullbacks like we have done in the past, where the 200 and the 50 have been used as strong support and resistance. So I'm going to feel pretty comfortable using the previous price action as a good indicator whether or not these levels are going to be respected very well. So just keep that, option number one is going to cover a broad spectrum of things. Where is price action currently in the market? Are we near support and resistance zones? Is there a path of least resistance? What is the respect been to the moving averages in recent current price action? Okay. Checklist number two, is there a nice spread between price and the moving averages? Is there enough meat on the bone before price reaches the moving average to take a trade there? Okay, because if there is, then you can hold a position longer because you can cover a pullback off the moving averages into your profit. Say if there's, let's have a look at this one here, okay? So right up the top on the left-hand side, top left corner, between the price action and the first moving average, there is a 200 pip spread. So I'm going to be comfortable, I'm going to be absolutely fine taking a trade short on the Aussie NZD longer term, because there is a 200 pip spread between where price action currently is trading and the 50 EMA. Now, if you're using a 4-hour time frame, for example, the same rules apply, but for like a 60 pip spread. So if there's 60 pip gap between where price action currently is and the moving averages, absolutely fine. I'm going to feel comfortable taking a trade before the moving averages are hit because of the fact that there's a nice gap between the two. And if there's a bounce off the moving averages, my profit can cover that bounce before we get the continuing play down through the moving averages. I tell you what, guys, actually, before we carry on with this Aussie NZD, look at the Euro Yen. Okay, this is a really, really good example here because on the Euro Yen 4-hour time frame, we've got the moving averages here. Okay, now those moving averages, this on a smaller time frame, we actually saw a bounce here. You can see where the candlesticks come back up and closed above the 50. But because of the fact we executed up here at 540 down to there, we had a 50 pip spread between price and the moving average. So I still felt comfortable trading against those moving averages. And because of where price action is currently being, etc. We're currently on a big resistance zone. So it's a good live example, that one, of exactly what I mean when I'm meaning trading above the moving averages. Right, so back to the AN daily time frame. Right, so yeah, that's point number two. Okay, now point number three is going to get very indicator heavy. It's going to get very indicator heavy. Now, the first thing on you guys, I know I talk about this every single day, but this is exactly what I want you to watch out for. All right, so let's move on there. So let's say on the daily time frame, let's see how much the spread is. So we're now trading down here amongst the support zone. So we're already gonna be thinking to ourselves in our mind, is this going to go long? Okay, we are in a major support zone that's been previously respected. Is this going to be a turning point for the market? So checklist number three could be: Are we currently trading at a resistance or a support zone? I guess. I mean, that might be let's not overcomplicate things in number one. Yeah, number three: Are we currently at a previous turning point in the market? Okay, number three: Are we currently at a previous turning point in the market? Okay, because I love using previous price action analysis to determine my potential outcomes for the future. Okay, you guys very much know that. I'm heavily into using previous price action to profit from future fluctuations in price. So that's a good one for number three. Right, so the first three we've got here, guys, is all based around analysis of the market, okay? Where are we? What does it look like? Do we have enough room between the moving averages and where price is currently trading, etc., etc.? So those 3 points there are the analysis. So we've done that. That looks good. We're on side for a trading opportunity here. Now, this is where we get right into the actual setup for the position itself. Max, how far back should we be looking at? A couple of... that's a question relevant to the time frame you're trading, Joslao. So this is where a little bit of traders' intuition, intuitive trading is going to come into play. So let's say we're trading off a 1 hour time frame. Okay, let's take a look. Current price action. So a 1 hour time frame here. Okay, so can I see an area? Can I see an area of a previous turning point yet on this one? Yes. Okay, so if I scrunch my charts up, I am looking for the previous area and price action. So if I'm trading off a 1 hour time frame, I'm simply going to look for this. I'm going to draw a little box around that area right there. Okay, bearing in mind this price action only took place on the 15th of November last year, so not very long, 6 months ago, 5 months ago. And then I'm going to be watching and I'm going to be reviewing price action from this level. So we are currently in a intraday, like a shorter term level of resistance on that place. So what I'm going to be looking at now is price action starting to weaken off. As soon as I see a breakout of this zone, then I could be looking to take a short. The same rules apply on the daily. There's no other way to put it other than it depends what time frame you're trading. It's very, very time frame orientated on that one. So scrunch back up and looking at this long. Right, so this is where we are at the moment. So first thing we want to be doing on number 4 is what is the squeeze looking like? Okay, we've done the review of price action. We know where price is currently trading. We've seen in the past what happens with price action when it gets down to these levels. It yields relatively powerful moves to the upside, 400-500 pip moves to the upside every time we get down there. So we've already built a picture in our minds of a probable outcome for price action before we even look at the indicators. This is just studying price action here from checklist 1, 2, and 3. Now 4 is going to be very, very systematic, guys. There's not a lot to it really here. So on the squeeze, are we getting shaded histograms? Okay, are we looking as though the squeeze is losing momentum to the downside? Okay, all along here we can see squeeze momentum is losing strength. Okay, we have a little bit of a go up. It's barely anything. We don't even break above the 200 EMA in this particular instance. So what we are doing now is we are looking for squeeze release. Okay, squeeze release. And squeeze release, for those of you who don't know, is essentially shaded histograms. Shaded histograms on squeeze. Okay, that's number 4 on the checklist. Are we seeing shaded histograms on the squeeze momentum indicator? Right, just let you guys get that down. Yep, cool. Okay, so the next one, should we look out for the light or dark coloured crosses? Don't worry about the crosses, okay, Joslau? I'm giving you the full. I'm giving you my full thumbs up for ignoring the crosses, okay? I don't want you to focus on the crosses. The crosses were a later implementation to the squeeze, and they are. For me personally, in how I've used this strategy for a long bloody time now, and the crosses they're just not. They can be relevant, but they lower the success rate quite significantly in the squeeze indicator. Okay, I mean if we still follow the rules and we look for the MACD cross and the volume, which I'm going to go to on the next couple of checklist points, it's fine anyway. But generally speaking, this is if we get grade crosses all along here. Okay, what is this? This isn't giving us the right signal. Okay, this is saying that momentum is bad to the downside. Okay, and we shouldn't be going short here. Whereas if we were actually trading short from this level and held our position, we'd be 300 pips up. So it gives you, it doesn't do the signal very well. So just ignore the crosses. So yeah, shade, squeeze, release. Do we have shaded histograms on the squeeze? So number 5 is, do we have a MACD cross? Okay, do we have a MACD bullish or bearish crossover? Huh? Sorry, Morpheus. What do you mean? What do you mean, B, buddy? I know. I'm not asking you a question if that's what you meant. I'm telling you guys to write that one down. A bullish, because in this particular scenario, we're looking at a long position on the AN, but long, short, it doesn't matter. So just, are we looking for a bullish or bearish MACD? Have we got a bullish or bearish MACD crossover? In this particular scenario, we've got a bullish crossover. Okay, so the green is coming above the red. Yeah. $12.26 in close 9. Wonder. Yep, absolutely spot on. Traditional MACD settings. Now, under this MACD point, guys, once you've got that one down, I want to get you guys to make a little bit of a subheader, okay, a little bullet point underneath, and just be sure, do we have MACD spread? Okay, do we have nice MACD spread? Okay, and the reason I say that is because I want to give you guys the utmost, I want to give you guys the absolute best chance that I can at getting really, really consistent in your win rate and your profiting from the strategy. And when I was learning everything about the MACD, I would be taking shorts and longs on a MACD cross when we had the MACD and signal line on top of each other. So I would see a MACD green above red with shaded histograms in green volume. I'd go long at this point here, just for an example, and get stopped out straight away because the market fell another 160 pips. So do we have a nice MACD spread? So do we at first have the MACD crossover? And is the crossover nice and significant? Are we getting the spread apart? And you may be thinking to yourself now, but how can I tell if it's a nice spread? Do we have growing MACD histograms? Okay, so point number, like the subheader underneath MACD, do we have growth in MACD histograms? Because the MACD histograms, which are actually a later addition to the MACD indicator, indicate the actual difference between the MACD line and the signal line and plots how decent the momentum is to the upside or the downside in the market. So they are absolutely crucial to the indicator and should not be ignored. They are there to help you guys, so make sure you pay them some attention. So do we have a MACD crossover? Do we have a nice MACD spread in terms of the MACD line and the signal line? And are the MACD histograms growing? Okay, do we have nice strong MACD histograms? Okay, that rounds up the MACD part there. And just let you guys write that down. Give me a okay when you're ready. Cool, nice one. Right, so third, is gonna clearly be the volume indicator. Okay, so third on the indicator part is, do we have volume on side? Okay, so irrelevant of whether we're going long or short, do we have the volume on side? Is it green? Is it red? You know, vice versa for shorts and longs. Do we have the volume on side? Okay, guys? Yeah, cool. Okay, nice one. Right, so number 7 then. So that's it. So that's it with the indicators, okay? So first of all, we've got where is price action currently trading? Is there a path of least resistance to the upside or the downside in terms of the support and resistance zones that you've got in the market? Is there a nice spread between your execution point and the moving averages currently? If price is trading above or below the averages, that's fine. Or do we have, you know, daily a couple hundred pips spread, 4 hour 60 pip spread, 50, 40 pip spread, 15-minute chart, do we have a 15 or 20 pip spread, and so on and so forth. That one just works down with the time frames. Then we've got, are we currently at a previous turning point in the market? Are we trading within an area that the market is actually rejected in the past, in relatively recent price action? Then we've got, have we got the beginning signs of squeeze release, shaded histograms? Do we have a MACD crossover, bullish or bearish? Is the MACD a nice spread? Do we have the growth in the MACD histograms itself? Finally, do we have the volume on side? If these are all checked off, everything looks good here, then we need to start looking at potential stop loss and target profit zones. Okay, so you guys now, you've been following me. So number 7 is going to be execution. Let's, irrelevant of wherever price is, execute off current price wherever price action is, because we've done number 1, 2, 3, 4, 5, 6, and 7. We've waited for the execution there. So your stop loss is going to be below the previous low. So stop loss for your position is always going to be, stop loss is below previous lows of price action. And when I say, so I can be quite accurate with this, guys, and not just give you a kind of generalization here. When I say below a previous low, I don't mean a pip below previous low. I mean, give it, let's say, you know, I'd probably say like 15 points, 15 pips below previous low on a, you know, on a 4-hour chart. On a daily chart, make it 30 pips below. Give it a nice little bit of breathing room. This is where a trader's intuition's got to come into play. You don't want to put a stop loss directly on a previous low, because price action could come back down and spike down to that level before we get a continuation onto the upside. A lot of this will come with chart time experience, guys. This isn't. I mean, how to form a stop loss and target profit is part of my strategy, but the learning price action and what it can do when it comes back down before taking off again, that's just relatively chart time experience. Previous lows, highs, depending on situation. Exactly that, Sonic. Yep, I'm coming to the, yeah, exactly that. So stop loss below previous lows or highs. Sorry, yeah. Previous lows or highs, depending on whether you're going long or short. So stop loss is always going to be below previous low or above previous high of price action there. Yeah, sorry, that was a bit bad. That was a bit bad wording on my part, guys. Yeah, it's just because I'm looking at this. This example here. So yeah, below previous low or above previous high in price action. So I'm gonna run through the actual example of what I would do on this trade. So down here we have shaded squeeze. Here we have a nice spread of the MACD line above the red line. We've got them spraying apart here, and we've got a green volume we've got 2 green volume histograms down here on the volume indicator. The second one is of growing size to the first. So we are growing in volume to the upside. So I'm going to execute my position, current price action trading at 05689. Okay, so there. So stops on this particular example are going to be down here at the bottom of this support zone. Okay, so 102915. I mean, the numbers are irrelevant, guys. Okay, but long story short, the low here was 32, and I'm putting mine at 29. Okay, so I'm giving it a nice bit of breathing room, 40 pips or so underneath the previous low there on the daily time frame. Now my TP for this one, guys, I'm not going to be looking at this monumental previous high up here. What I'm going to be looking at is I'm going to be looking for these bits of price action. Okay, now this is where target profits can be a little bit more complex, let's say. So number 8 is going to be target profit. And my TPs, I am looking for an area that price has been respecting numerous times in the past. Okay, so this isn't going to be an area right at the previous high. I'm not a greedy trader. Okay, I'm not a greedy trader. I'm not always gunning it for the very, very highest high. I'm looking for the highest probable outcome. I am looking for a win. I'm not looking for the largest win. I'm looking for a lot of wins and sort of a little bit less profit maybe. So what I'm going to be doing is I'm going to be going back through, and I don't know if you guys can very clearly see here, but we've got that area there, okay, that area in price, where price actions come up, then we get 3 daily candlesticks pulling back down before it takes off again. Prior to that, we get a double top on that area, and if we actually run along, we have got respect in price action going the whole way through that level. So 109680 is my level. That is an intricate part of price action where we see price action respect time and time again. So for this one, again, this is a little bit of a difficult one to put into a direct guideline. But what you want to be looking for is an area that price is respected time and time and time again. Okay, the area that's been hit the most times. So TP is going to be I don't know how to word that one either, really. Area of interest, I would call it, but generally speaking, actually, I'd say under previous high. So let's say a little bit lower than previous high here. So look for there. Then I'd be putting it at 110, maybe the 110 magnet. So TP is going to be slightly under previous high or slightly above previous low on that one. Now I'm never going to be looking for areas of significance in price action, John. It's spot on, mate. But the thing is, if I'm making a checklist for you guys, I don't know if everyone's going to actually be able to interpret what an area of significance is. So I just want to make this as simple as possible for everyone in the room, basically. Exactly that, KJ. I tell you, guys, at the end of the day, you can take some initiative on this and put down what you think will work best for you, because I can only relay what I see in price action, obviously, because every single person sees the market differently. So whatever works for you, but generally speaking, so we've got a very broad strokes idea here. What I usually do is I put my target profit slightly under a previous high for a long position or slightly above a previous low for a short position. That's generally what it equates to. I'm not always targeting the very highest high or the very lowest low. I'm looking for the highest probability outcome. And price action, generally speaking, comes up to just under a previous high and then reverses. And there's so many traders out there that are not getting their targets hit because they're always aiming for the highest point in the market where it's currently been. So I am looking for the highest probability outcome there. So under my one, I've got target profit, which is always slightly under a previous high or slightly above a previous low. On this one, because I'm aiming for the support zone, Sonic. Okay, because this is where price action's been. Okay, The one with the highest amount of respect in this AN at the moment so far in price action isn't this level around here. It's up here where all these tops and bottoms in the market are. Okay, exactly what I've just been going on about. The levels of most significance. What area has been attracting price action the most? Okay, so this area up here, we have a monumental amount of bottoms and tops in the market. So I want to be aiming for somewhere around this level. So for this particular scenario, I'm going to be putting my TP up at 110. Right bang in the middle there. So for all intents and purposes there, guys, we have now got a trade open. We've now got a live trade. Okay, so we've got an 8-point checklist. Where is price action currently trading? Where is the path of least resistance? Is there a nice spread between pricing where price is currently in accordance to the moving averages? Are we currently at a previous turning point in the market? Is the squeeze release on? Shaded histograms. Do we have a nice bullish or bearish crossover on the MACD with growing histograms there as well? Do we have a volume on side? Stop loss is always going to be below previous lows or and above previous highs. And finally, our target profit is going to be an area of significance in price action, which is generally going to be around the previous high or the previous low in the market, not the very top or the very bottom. So let's move price action along a little bit. Okay, so we're now into squeeze. We've got the continued growth in the MACD histograms. We've got growing volume on side. We continue up. Okay, still going up. Still going up. And bang, our TP is then achieved. Now, as soon as that 110 level is achieved, look at price action's relationship to it. Okay? Look at what happens when price action gets to 110. Okay, and trust me guys, I did not memorize the 110 level to say, oh yeah, that's going to be a good one because there's a pullback there. Look at that is just, that's exactly why I target those levels. Because when you get there, we then yield a move to the downside in the region of 240 pips. Okay, back down from that 110 level. Which is why that level to me is going to be the one of significance because we've got a lot of areas of interest around here. Yeah, it could be, John. Yeah, it could be, mate. I mean, the science behind it, it could be that. It could be just, it could be a price action reaching this previous area of supply, and we get a lot of, we get far more bulls in the bears in the market. It could, it's a number of reasons there. What's the exact name of the volume indicator? It's Weiss Wave Volume, Wonderk. It's, hang on a minute, mate. Weiss Wave Volume by Lazy Bear. There you go. How do you put in the TP, EP on SO on the chart? If you use TradingView, go over to the left-hand side here, and you click on the little long position, short position, and then you can do it that way. You can also, if you double click it, you can open up the coordinates and do it, get it absolutely spot on here. So, target is 110, etc. You just type it in. Okay, guys, and that's pretty much it, And then when we get here, okay, we've reached our TP, this trade's been out, you just rinse and repeat the process. Okay, so when you get here, your TP's already been achieved. Price action comes up to this level of 110. Now down here, okay, let's say we execute here, shaded squeeze histograms, okay? So yes, the market is at a previous area of a turning point. We are amongst a big area of resistance. Checklist done, tick. Is there a nice spread between price action and the moving averages? Let's have a quick test here. Yes, there is 140 pips spread between price and the moving averages. Okay, check, that's done. Is there a squeeze release? Yes, there is. Check, that's done. Number 5, do we have a nice MACD crossover starting to form with red MACD histograms? Yes, we do. Nice spread starting to form down there as well. Check. Number 6, do we have volume on side? Yes, we do. 3 volume histograms, and we have growth in the volume. Check. Okay, stop loss is going to be above previous highs here. So we're going to take a short from So set up an alarm here. Short is going to be there. Stops are going to be above, just on top of that zone, that resistance zone. Your TP is going to be back down here, under, just above the previous high. Okay, so you're going to be trading down there. You're going to be trading above the previous low. Sorry, and then you just take it away. Okay, and we see what goes on here. Follow price action down. Came back up to break even. Coming back down, and bang, price action struck out. I mean, that one, guys, you probably, I reckon, where did price action get to? Price action in that one got to 39 and our TP was at 38. So that's 10 pips gone. Have I gone? Is the stream cut off? What do you mean, John? Did I go off stream for a minute? Right, sorry guys, sorry. Yeah, no, I was basically just rinsing and repeating the process here. Okay, so yeah, I was just rinsing and repeating the process, running through the checklist and rinsing and repeating the process. So you've got one long shaded histograms, the MACD, the MACD squeeze release, the MACD crossover, and that trade in there. We did the high up to 110, stops below previous lows. Okay, and just rinse and repeat. All right, guys. So I mean, yeah, that's relatively it, guys. Yes, that is, this is a ranging market, but if you think about it that way, I mean, most markets are ranging. Most markets are unfortunately ranging at the moment. We haven't seen many. I mean, apart from the USD CAD at the moment, USD CAD's been in a beautiful range. The GA as well, that's been very short a term, but the GA's been in a really nice range. But most of them, unfortunately, are ranging at the moment. But it doesn't really matter if you're in a trending market, because there's always some kind of previous price data to look for potential outcomes. I mean, if we go up to let's pick a ranging a trade. Sorry guys, let's pick a trading. Oh my god, I need a morning coffee. I haven't had my coffee. Trending market is what I'm trying to get my bloody words out. I had a couple glasses of wine last night, guys. Oh dear. Yeah. So I mean, this USD CAD's been in a really, really nice upward trend now. It's been trending to the upside since 5th of September 2012. But if we actually use previous price action here for outcomes, you have always got another target profit zone to be using the whole way up here. The whole way up. Let's take this example, okay? Let's say you want to go long USD CAD. All right? Let's say you want to go long USD CAD from here, okay? So as you can see, guys, this is a trending pair at the moment. We've got squeeze release, we've got a nice MACD crossover, we've got the green volume on side, okay? Stereotypical max trading sniper system up to the upside. Let's say we set our TP. We're gonna have stops below previous lows, same as always. And we are going to set up our first TP, and let's say the first TP is going to be here, just underneath previous highs. Okay, so that one would have been done, but when price action gets up to around here, and we're still seeing good momentum to the upside, I'm going to be editing this. I'm not going to let this get stopped out at the moment. I'm going to be editing this. So I'm going to bring this is a bit to do with trade management, which I'm not really going to make the focus of this video for. But let's say, as an example, I personally would be bringing my stop up to around 50% of the profit, up to around 110. And then I'm going to be like, actually, I've got no price action here to be trading off of. No previous price action for a target profit. So what I'm going to be doing is I'm just going to scrunch up my charts. And what I'm going to do, let's say we were here in price, all I'm going to be doing is I'm going to be looking at previous areas of interest here. Okay, so over here in the USD CAD, and bearing in mind this is back in 2009 in July, we've got this area where price actions hit once here, an area of interest. we come down, we have a V reversal, we come back up to almost the same point. I mean, yes, it is in the way of 200 moving average, but that is interesting to me. Okay, why did price action respect this level here? So that to me is going to be a good TP zone. So that's 116.20. So then we move along. Where are we? Yeah, so right. And then we follow price action up. So this is going to be 16. Yeah, so just under that high. Okay, I'm not going to be greedy and aim for the highest high here. So previous action, price action comes up, bang. And then look what happens, funny enough, guys, when we get to that area there. Okay, this is why I love studying price action. I love it, guys, I really do. And look what happens to price action on the daily time frame once we hit TP. We spend from the 15th of December to the 5th of January trading around that level before we get the breakout and the continuation onto the upside. So that is clearly an area of resistance there. And that is taken, bearing in mind we're in 2014 here. How many years is that? That's 2015, sorry. That's 6 years, guys. 6 years later. And these levels are still relevant. And they're still going to be relevant in another 15, 20 years' time. They really are. So always find previous price action here to determine a potential outcome for future price. Always, guys, always. I really want to put some emphasis behind that one. Right, folks. Well, yeah, I mean, that pretty much wraps it up, guys. We've got 8 points on the checklist. Follow them, stick to them absolutely immensely, guys. Stick to them every single time. Okay, stick to the whole process. Don't just be a robot trader and trade anything that has a squeeze release MACD cross and a volume on side. Remember call points 1, 2, and 3. Where is price action currently trading? And even ask yourself, write this out, type it out, stick it on your wall whenever you decide to trade my strategy, and read it out to yourself. Where is price action currently trading? Do we have a previous area of support and resistance? Where are the moving averages, etc., etc. Just ask those questions to yourself out loud. So long as you've got points 1, 2, and 3 on side, and you think they look good to yourself, then look for points 4, 5, and 6. Are the indicators on side? Are they matching the price action? Finally, if 1 through to 6 look good in terms of the points, then you've got 7 and 8, which is about your trade execution. Stop loss below previous lows. And TP is going to be slightly under or slightly above previous highs and lows there as well on that front. Right, so let's go for some questions then. Hey Max, in analysing a trade, how do you understand how price action will go using the 3 indicators in order to avoid taking a trade just before consolidation? Hey Max, in analysing a trade, how do you understand how far price action will go using the 3 indicators in order to avoid taking a trade just before consolidation? How far do I think price action will go? Yeah, no problem at all, John. No worries. How far will price action go? What, do you mean okay, I think I get you deep pockets. So let's have that's not even area consolidation really. It's still a nice move to the downside. Just need to find some consolidation. Like this bit. Okay, so if we get to, let's have a look at this price action here. Okay, big area of consolidation. We have a squeeze release, we get the MACD crossover, and we get the red volume on side. So for me, if I was literally here, like looking at these indicators, excuse me, that would be a sell. Oh, sorry guys, excuse me. So first of all, on the open of that position, which is going to be there, what is the gap between here and here? Okay, nice gap, 345 pip gap to the downside, except we don't move anywhere. So I'm going to look at previous price action. Okay, previous price action would determine that would be a big area for a short as well, wouldn't it? Okay, right around there. So if we continue on, it does go short down to previous lows as well. I need to find an actual live example of what you mean, deep pocket, in order to give you an accurate answer on that one. I mean, without even looking for a live example, okay? Because without even looking for a live example, this strategy will not let you win 100% of the time. Okay, you guys need to be very. It's easy looking at this and being like, this is a buy, this is a sell, this is a buy, this is a sell, and it's different applying it into. Well, it's not. It's not different at all applying it to live trades, but it's your mindset changes. You've got a different psychological approach to the market when you're actually there executing a position as opposed to looking at previous price that you're not going to be risking anything on. So I mean, it's good. I mean, in terms of 60. You will probably, if you stick to the checklist and you become very, very attuned to how this works and become extremely good at reading distances, reading your moving averages, and determining the path of least resistance, and becoming a real high study level of price action, you will be averaging higher than 60. You'll be more in the region of the low 70s using this. Using this strategy, no doubt at all. I believe every single one of you can do that, so long as you get the discipline and the psychology behind you as well. If you follow the strategy and these checkpoints, guys, and you follow them, I mean, down to a T without bending any rules, you will profit in the market. No doubt you will profit in the market. But it needs to go along with the other spinning plates. Risk management, these other core concepts that we're always talking about. You need to manage your risk, accordingly. You need to get your mindset on side as well. It's a massive, massive psychological battle that you guys have in the markets. So you need to get those bits on side. It's not as simple as, follow my 8-step process and you'll be a millionaire in a couple of weeks. I wish it was that easy, but unfortunately not. For that question, Deep Pocket, I think I would just say, at the end of the day, for 4 weeks, John, I think I would just say, at the end of the day, you are never going to win 100% of your trades. Sometimes you are going to take a buy or a sell using this strategy, and unfortunately, it's just not going to be playing out, okay? It's just not going to be playing out. This checklist that I've done this morning is really to try and give you guys the best head start that I possibly can in using the strategy to benefit from the market. You're never going to win 100% of the time. You're never going to win 100% of the time. There's going to be areas of consolidation where it initially looked like a buy or initially looked like a sell, and bang, it's just not going to go your way. There's going to be a fundamental aspect that you've missed or that you thought weren't going to affect the market, and actually pings it off the other way. All the indicators switch around. There's always going to be spinning aspects of that there, but you just can't get that. You just can't get, you can't get past that. That is part of being a trader, unfortunately. So let's have a look. I'm just scrolling up, guys, catching up with some lost questions. Not yet, Sonic, exactly that. Max, this is a big help. Thanks very much indeed. May I suggest that the tech guys add this stream to your video series? Possibly. I mean, there's been a few really that could have been in there, but the bottom line is I'm going to be doing an actual breakdown of this on the module anyway. I just wanted to give you guys the heads up beforehand so you can sort of get out there and start using it, because I've got so much work going on at the moment, guys. So I think it's going to be a while before module 2 comes out, that's all. There's been a lot. Hi Max, can you put this 8 point on the group so we can have it? I can type it out. I can type it out for you. Where does Heikin Ashi come into it? So Heikin Ashi candlesticks, I use Heikin Ashi to benefit me within this, but to benefit my analysis more than the strategy. The squeeze momentum indicator is based on OHLC candle, okay, so open, high, low, close. They're not based on Heikin Ashi candlestick formula. The Heikin Ashi is really for my analytical approach to the markets. Have we got a nice trending market to the upside? Have we got a nice trending market to the downside, and vice versa? Also with Japanese candlesticks, you can see closes below the EMAs prior to them actually closing below the EMAs, and then we get reversal points in the market. So you might see a Japanese candlestick close down here, but below the 50, which would indicate that we're going to get a move down to the 200, but the market reverses immediately, it comes back up to the previous highs. And Heiken Ashi will always save you from that. For me personally, I cannot be seen to confirm or deny this fact, but for me personally, in the way I use Heiken Ashi, it reduces a lot of false signals that are generally provided by Japanese candlesticks. Do you use supply and demand indicator for price action? No, I do not, Sinjul. No, not at all. Always manual. No indicator needed. Looking back on to that example with previous areas of interest, it consolidated, then took off upwards again. The upward pointing MAs would give an indication that it would continue up rather than see at the interest level. Yes, Logsy, absolutely right. Yeah. Yeah, that's it, mate. Tripwire 1. Yeah, which instruments are you using except? Which instruments am I using except MACD? Which indicators? I use the squeeze momentum and the Weiss wave volume. If you don't know that one, buddy, it's worth you doing module 1, because module 1 will give you the full breakdown of all the indicators and the tools I've got in place. But when you are like this, it is the best way to teach. Please don't use the whiteboard for future learning video. You are best like this. It is your style. Yeah, I know, KJ. It's funny you say that, actually. It's funny you say that, because I feel way more comfortable teaching like this as well. But the business has a view. They have their idea of what they want. So I am but a lowly staff member here. So I need to abide by the rules. But I like teaching this way the best as well. I like the live environment. I like you guys being able to talk back to me when I'm teaching. Max on the squeeze indicator. John D. Max on the squeeze indicator. You use the momentum indie bit with the price action rather than concentrating on the squeeze. On the squeeze indicator, you use the momentum indicator bit with price action rather than concentrating on the squeeze. Yeah, I do. Yeah, I do, John. Yeah, I think that's a pretty safe bet in me saying yes, I do on that question. I mean, the idea, what I'm looking for, what I am always gunning for in the market is the momentum. I'm always gunning for those explosive parts of price action, the beginning of a nice move in the market. That's what I'm there for. Okay, I'm there to line it up in the crosshairs to get myself in on the first or the second candlestick prior to a really nice move in the market. That's what I'm all about. I am not interested in getting in halfway in a move. I'm not interested in getting in at the bottom of the move. I want to get in right bang there when it happens. That's pretty much it, mate. Yeah. And I also use, it's a good question. It's a good point to make, John D, because I also use I actually use the histograms on the MACD, just as much as the squeeze momentum here as well. If I see the green on green that I'm always talking about, if I get a really nice line up of the shaded squeeze here, histograms, nice momentum on the MACD to the upside, really growing volume, that to me looks visually pleasing. Like I mentioned to you guys before, I'm a really super visually orientated person. So there's a lot of the former traders that I used to work with and a couple of my mentors, their charts didn't look anything like this. They had hollowed out Heiken Ashi candlesticks. Some of them even traded still with Japanese candlesticks. They had the squeeze momentum indicator wasn't red and green. It was blue and yellow. I think it was. The MACD as well. There was this MACD. One of them was yellow. The other one was a different color. It didn't look anything like this. But I color coordinated my charts because it helped me profit in the market. And some people may think, oh, it looks silly or whatever. But the bottom line is, guys, I've got a healthy account, and if it helps you get a healthy account too, then don't worry about what anyone thinks. Just go for it. Whatever helps you profit in the market, just go for it. It's got to be your story, no one else's. And this one certainly helped mine. Looking at things like this. If you was looking at a trend trading, could you look at moving averages on a higher time frame? If you were looking at trend trading, could you look at moving averages on a higher time frame? Yeah, yeah, absolutely. I mean, some people don't like the idea of using EMAs on a higher time frame because they're too because you see price action snapping through them too often. But yeah, absolutely, John. Yeah, 100%, mate. 100%. Could you provide a template of your current chart setup? Yeah, I already have a template somewhere. I'll try and repost that one, William. Actually, I'll remember to do that. Yeah, no worries, John. No worries, William. So yeah, I mean that's pretty much it, guys. I mean, I put it into practice. I mean, the best thing that you guys can do is go away and use it in the live market example. I mean, the bottom line is manual backtesting is the most efficient way to backtest. Okay, but it is a long and arduous process. But if you're looking for shaded squeeze, MACD crossover, and red volume, and what did the market do at the time of that happening, you're not going to get many misinformed signals. Okay, you're really not. You're really not. I don't have the holy grail in trading. It is nowhere near a holy grail in trading. But what I can tell you is it's bloody good enough. It really is. And if you look through here, back every single time when you've got a nice MACD spread apart, shaded histos, green volume on side, you are going to get a move in the direction that the indicator's telling you it is. Okay, if you look for the core signs. But the best thing I think you guys can do is maybe if you're not comfortable testing it out on a real account immediately, which I completely respect and understand, do it on a demo. Go away on a demo and just take trades on the setups. Okay, I mean, not on this USD CAD on a daily time frame though, because it's bloody horrible at the moment on the daily. But like on the 1 hour time frame for a heavy consolidated market. Okay, look, 1 hour time frame, guys, not the daily. Yeah. Look at the whole way along here. Okay, we go back. This is right up to date price action, 29th of March to the 19th of April. Yeah, we get the price action here. Okay, to the sell sign. What does price action do down here below? Shaded squeeze, MACD cross, red volume, and we get the sell down to our target. What happens when we get here, guys? Shaded squeeze, MACD cross, green volume, execute to the upside, previous high there. Okay, what happens when we get here? Shaded squeeze, MACD cross, red volume, we get the sell sign, and we keep on going through over and over and over and over again. Same sign every single time. You hit off those criteria on the checklist, you rinse and repeat the process. Max, I've been looking at your system the last few days. I've noticed some fast moves from the setups in more volatile markets. Does it work the same? Yeah, so I mean, I'd say yes. You've got to be a bit more vigilant with the approach. Now you can't be sort of like, yeah, it looks pretty good. You know, might take it, might not. You've got to be quite vigilant with it. But I mean that euro yen. If we have a look at that, that's not really a good example, to be honest. I mean, what was that one that you took, John? You took one on the US 30, didn't you? You took one on the Dow, didn't you? You took this one here, didn't you? On the Dow Jones, was it yesterday or the day before or something? Was it yesterday? Oh, on the DAX, yeah, GER 30. So look at the DAX. Yeah, so that was this one, wasn't it? So I mean, that was a pretty volatile move to the upside, and the same rules apply even on the 15-minute time frame. Okay, I mean, if you were actually using the execution, you probably would have got in here, just below this little pullback. But if you had stops below the previous lows, then you're absolutely fine. Okay, and straight away the price action takes off to the upside. I mean, that one went up even further, up to 12,270. But yeah, I mean, is that what you mean, mate? I don't know if that answers the question. Breakouts pop from the squeeze. I mean, in answer to your question, I think yes. I think it does. I mean, so the strategy before I implemented a couple of changes and enhancements was initially created to be used at the London Open. Yeah, it's all right, mate. No worries. It was initially created to be used at the London Open and the US Open. So the strategy is designed around session breakouts. That's what it's actually designed for. So you can get in at the market prior to a session breakout taking place. So I mean, with that understanding in mind, it will work all the same. It will work all the same. I mean, it's even the same. You know, we've been through the different time frames now. It's even like the 5-minute time frame. Okay, just let it load up for a minute, guys. Oh, come on, TradingView, don't do it to me. Don't do it to me. There we go, 5-minute time frame. So we look at this 5-minute time frame here. This is the exact same place on the 5-minute time frame. So here we've got the 5-minute time frame, guys, and look what we see. Okay, MACD crossover, a nice starting and crossover here. Okay, green histograms behind the MACD signal line as well. We've got the growing volume, we've got the shaded squeeze. That there is an execution straight up, right at the beginning of the move. Then the market moves 30-40 points to the upside. Okay, exactly the same thing. Even if we look on a daily time frame, it's the exact same thing. Let's look at this move to the upside on the daily, right here. Okay, daily time frame, we got the DAX index. Okay, we're going to take a long position up on a shaded squeeze. The nice MACD cross in green volume, that is there. So we execute our position. TP is going to be just below the previous high. Stop loss is going to be just below the previous low. Ride the wave up. And we get stopped out because that one didn't hit. But you get the idea. You get the idea. Hey Max, how did you find it on the 50-minute scalping? Yeah, absolutely fine, Daniel. Absolutely fine. Yeah, cheers, Sonic. Gold on the 5-minute was a good one the other day in the stream. Let's have a look at that one. Gold on the 5-minute. Okay, well, so this one here, maybe, John? To the upside? Was that? So that would have been in the morning, wouldn't it? Relative. Well, it's a bit before my stream, that one. It was short. Short. Oh, right. Yeah. Okay. So here, this is the short you'll be talking about. In my afternoon stream, what 1:30? That one there. Maybe, possibly. Yeah. Yeah. So on this case, I mean, the strategy here would have got you in on the first candlestick of the move to the downside. Okay, so price would have been trading around 1282, and at the end of the move would have finished down here at 1272. Okay, on the 5-minute time frame. So yeah, not bad for a scalp. Yeah, absolutely great risk reward. Yep, stops are just going to be above here. Previous highs in the 200 EMA. Target profit's going to be well, I probably would have left the target profit open, to be fair, on that one. Previous price. I would have had to look on a 15-minute time frame for that one. 5-minute, you don't get much back data. Same rate of wins, 60 to 70%. I mean, it's what you make of it, Daniel. I can confirm that you're going to take 70% from the strategy because you're only just learning it now. But once you study price action itself, once you learn all the spinning plates and you get confident with it, yeah, I don't see why not. I absolutely not. I do not see why you can't follow a shaded green MACD crossover and green volume and just take a long here, or a short, vice versa. It's relatively straightforward, mate. It's very, very systematic approach to the markets. and it does, and it will provide you with a good winter loss ratio. But remember, it's more about your risk management than how many times you win. Okay, it really, really is. The risk management is very important, but that's why I've got number 7 and 8 as part of the strategy, because I always use previous price action to determine my possible outcomes, which raises that probability of the trade going in my direction anyway. So don't forget, even though it's not part of the indicators, don't ever forget number 7 and 8 and where to place your stop loss and target profit, because that is crucial to the strategy overall. For the volume indicator, what's your settings? That was really easy, Wonderick. This is trend detection length is 2, and we do not show distribution below 0, which is below the 0 line. Distribution is only shown above the 0 line. Nice one, John, mate. Well done. Right, folks. So I think we'll have a little look at what's been going on then, shall we? We'll have a little look at what's been going on in the markets, or I'll tell you what, actually, do you want me to get off this stream? I'll shut this stream down and then I'll have another stream. So this stream is just for this lesson on its own. I'll do that if you want. Yeah, I'll shut this stream down, guys, and then I'll start another stream directly after and we can take a look at the markets. Alright, speak to you in a minute, guys.